Okay, welcome. Happy Saturday, everyone. We're going to start out this technical analysis of the stock market video by looking at the weekly charts. And I want to point out just what happened this week. Do we see any major technical changes or inflection points? The weekly charts are important to follow, not so much for giving you an idea of when to enter a trade or when to get out of a trade, but where the major trend is going or potentially heading. So you always want to keep that in the back of your mind, looking at the larger time frames. The larger trend should continue to play true, and we try to find that using the weekly chart. So we'll get right into it. Give me a thumbs up. Check out the course. Link in the description below. Let's get going. All right, so we'll start off here with the Qs. Why do I always start with the Qs? You know, for me, Qs has been the leadership of the last bull market that started in 2009. You can see here, this is the weekly chart on the Qs going all the way back to 2009, and it's pretty much just been in a bull market ever since. Qs has never actually shown signs of breaking that bull market except for twice, which was right here in 2018. That was a clear break of the bull market right there, but then the Fed stepped in shortly after and saved the market. And then the COVID drop, that was another clear break of the bull market, and the Fed stepped in again. So both times the Fed has stepped in. Now, we watch this and understand, I think it's important to understand what the Fed has done here, because it sets you up for the next trade, right? If we start to break down and break this bull market trend line again, then we look to the Fed to see what they're going to do or what they could potentially do. Right now, the Fed does not really have interest rates to use as a tool to save the market. So they literally only have bond purchases. They might do stock purchases. They can't legally purchase stock, but they can buy more corporate debt, and then the corporations can buy their stock back. There's lots of different things they can do. But it all revolves around printing a bunch of money, and that's why I'm longer term I'm bullish on gold. Gold is the anti-dollar. If you're going to print a bunch of money, then I think you're going to want to own gold. So that's that's why I look at the Qs first, because this is the leadership of the market. Financials obviously is the lifeblood of the economy. And debt and the financials is the lifeblood of the economy, but not necessarily the lifeblood of the market. If you look at the financials, they haven't really performed well over the last 10 years or so. Up until recently, they've been doing well. But the tech sector has been just straight in a bull market, pulling the market higher. And on this weekly chart, you can see clear breakdown of what looks to be a bearish rising wedge. So this is coming off the March 2020 lows. And we have a bearish rising wedge that was created up in here on the weekly. And basically, we've now broken down. I can't draw a trend line. I really can't draw a trend line that doesn't show that this is a breakdown coming off the March lows. Now, if I just want to, maybe make a trend line like this or down here, then, okay, we haven't broken that trend line. But we broke this bearish rising wedge, and it's a clean and clear sell signal. So we have a weekly sell signal now. That tells me much lower prices are coming, because you don't get weekly sell signals typically, and then the trend just stops and reverses and starts heading higher. Typically, if you're going to get a breakdown in a weekly sell signal, you're starting a new trend, which is at what this is telling me is to the downside. Okay, so that's what I see here. Weekly breakdown, weekly sell signal. Now, we could bounce next week. We could pop up to 322 or so. There's a gap in here that we could pop all the way back up to 329. I don't think we're going to get up to 329, but we could move back up to 322. However, you can see where we closed the week was basically right on support. So 314 in the Qs seems to be support right now. And we closed pretty weak on Friday. Let me just flip open the daily real quick, and I'll show you what happened. They were trading, it was kind of trading above. Actually, you have to look at the last few minutes of the trade day. You'll see here in the last few minutes of the day, everything like we're going to hold, and then they just collapsed it right down to support. So, we closed the week right on support. We closed the day on support. We'll see what next week brings. All right, just to wrap up this one, now we have a sell signal. So whether we bounce, I still think it's a sell the rip market. What that means is we're going to trend lower, from my opinion, and the bounces that we get are opportunities to either add to short positions, or if you're long the market, because there's a lot of people that are long this market, that's opportunities to maybe exit some of those longs, take profit on those longs if you haven't already done so. Or if you're looking to short the market, add to shorts, or, establish a short position. So sell the rip is really how I think this is going to play out, which means we move lower, we trend lower with bounces along the way. Moving on to SPY. All right, so SPY, we also had a sell signal on SPY. You can see here this bearish rising wedge right here. Now we've already had one sell signal. This was a sell signal back here, and it ended up being a false breakout. But we now have another sell signal. We actually have two down weeks. So we have, this week and last week were both selling weeks, and we have another sell signal. So again, this combined with the Qs, both major indices, the S&P 500 and the triple Qs, are on sell signals, telling me that we're likely to see lower prices. Where's SPY going to go? Well, I think SPY is heading down to this 358 area. You can see we have several weeks of support right there, held it right there, held it here. So I think that's the next level of support right in there. And so we'll watch that. 358, 360, 365. It depends on when we actually get down there. But I think we'll likely hold some support there. One thing I also want to point out, it's interesting that I noticed on the daily chart is right here. I just want to point it out. It's on the SPY right before the COVID drop. You can see that what we were doing is trading along this blue trend line right here, just from below. So that was resistance, and it basically was holding just kind of flat. We had a little bit of a drop, so it kind of made it look like, okay, now we're going to roll over, and then they bounced it back up and recovered it. It didn't go anywhere though. It just still held there, and then you get the real drop. And that's exactly what we just saw in the SPY right here. You can see basically we were kind of trading up into this blue line. We got the pullback here, and then it recovered, and it didn't go anywhere. It just kind of held sideways, and now we're starting to see, more selling. So is this going to play out exactly like it did in before the COVID drop? Maybe. The market is, heavy on algorithmic trading, and computers repeat patterns. So just something to look at. And again, if you don't know what this blue line is, I pointed out in many of my videos, most of them, because it's one of the major theses behind my bearish outlook on the market. So this is the 2009 lows. We're looking at a weekly chart, and this is support. It's a trend. This is the bull market trend in the S&P 500. So I showed you the bull market trend in Qs, which has not broken bearish, but the S&P 500 has, and it's been bearish for a few years now. Held support all through here. Broke in 2018, Fed pumped it back up. Broke in COVID drop, Fed pumped it back up. That's kind of what's happened. That's basically the story of the market for the last few years. Is the market wants to break bearish, and then the Fed's pumping it back up, manipulating the market higher. Market breaks bearish, Fed manipulates it higher. This is not earnings growth, okay? Understand that the market has not been experiencing, corporations have not been experiencing earnings growth. They've been experiencing multiple expansion, which is when interest rates drop, then you get multiple expansion. Stocks can move higher. Interest rates are pretty much at zero right now on the short end of the curve. So again, we're at resistance, and that's that blue line there, and we're starting to see sell signals. So, again, could be the top of the market. We could go a little higher. Nothing. When you're in the area like this, you can gyrate and kind of pop up, break down. You can do that for a little while, but I think we're in the area where we're not going too much higher. The only thing that would make us go too much higher is some sort of a blow-off top move. and we'll look for that if that starts to show up. But as of right now, we're at resistance. I think we're heading lower. I'm positioned that way as well. IWM, excuse me. Let's look at the long-term analysis on IWM. Here's your 2009 lows. And this one, all right, we broke below it right here. So it was a little bit of a break, but we didn't really have an established trend in IWM at that point. Once we recovered it, then you can see the market really fell in line and started to establish a nice clean trend. Every single time it hit this trend line at support, the buyer stepped in. So it was a well-established bull market trend at that point, and it lasted for a few years. But back in 2018, just like the S&P 500, we broke trend. And then the SPY has been weak, the IWM has been pretty weak the entire time. You get the COVID drop, and then massive rally in the IWM. Obviously, with my bearish outlook, longer term, it's hard to catch some of these rallies. But I didn't catch the rally in the IWM. I did catch some of the bounce in the Qs at the lows. I was long the Qs down at the lows, and we rallied right into resistance right there. You can see. So again, major resistance, and we are seeing signs in the other markets that they're starting to break down. The IWM hasn't fully broken its trendline support. I think just a little bit lower. We get a close down below the 218. Basically a close below 218, and we're going to break that support. And then I think we head lower. And ultimately, I think we're going to head down to here, about 194, 200, somewhere right in there. Probably get a bounce in that area. Okay, so all the action has been in the bond market this week, and that's what everybody's talking about. And I've been talking about it for a few weeks, saying these bonds are rising, and I think they're going to start to cause problems over 1.5%, and that's exactly what has happened so far. So the bonds rose above 1.5%. They actually spiked, and then markets really started to react negatively. We did see a reversal in the long bond, the TLT. That is a clear dragonfly doji right there. That is a big reversal basically in the long bond. So you can see we came down to the blue line, which I had marked out as major support, coming back to 2011 lows. Again, we're looking at a weekly chart. We broke below it periodically, but once we're above it, we should still get some reactions on this trend line, and we did. We fell below it, and they snapped it right back up and closed above it. So that is a reversal candle or a doji candle. However, on the weekly chart, you need to see confirmation, which would mean more upside in the bonds with a closing week above this previous week. Let me show you the daily here. You can see bonds, big massive move, big reversal basically, and confirmation. So basically we had this drop below, we snap back up, putting in a reversal candle, and then we did get confirmation on Friday. So again, that is a reversal in bonds. What does that mean? Well, bonds typically rally when the markets sell off. This is safe haven buying. So this is not a risk on move. Understand that as the bonds were selling off, the markets didn't care. They kept rallying, thinking that they were rallying on the reflation trade, and everybody's saying, "Oh, everything's going to open back up. Everything's going to be great. We're going to rally on the reflation trade." And then the Fed basically said, "Hey, that's fine. Let everything open up. We're not going to change our stance. We're not going to provide more stimulus." And then the markets all of a sudden started selling off. And so now you're seeing a risk-off move. That's what bond buying is. People rush to bonds, they rush to gold when it's risk-off. And that was a reversal, so likely, if this is going to continue higher, we're likely going to see markets sell off. This is just another confirmation that tells me that markets are getting ready for a big sell-off. So let's stay on this bond theme real quick, because I just think it's one of the most important concepts to understand really for the next major trend. Here's LQD, which is corporate bonds, corporate investment bonds. Now, they should hold up better than the market, but they are still a risk-on move. We did see, a little bit of a reversal here in the corporate debt market. And this is investment-grade corporate debt. So it's basically, A pretty much A paper. I think it goes up triple B plus or triple B or something like that. But basically, quality corporate debt. And so a little bit, that was selling off, a little bit of a reversal. We'll see how this one continues to play out. This could trade like a treasury, but again, it's not as good as a treasury. So this is competing with a treasury. If the yields rise on a treasury, which is risk-free debt, essentially, minus inflation risk, then these won't perform as well as treasuries. Let's look at the opposite of investment grade, which would be junk bonds. So junk bonds typically trade like stocks. They are risk-on instruments where they're high-yield debt, basically. Here's JNK. You can see clear breakdown right there in price support. We can mark some trend lines out just to see if we have any substantial breakdowns. Yeah, so that's about as good as I can make. I can't really make a trend line that has a lot of connecting data points. You could maybe mark one out right here. We'll mark that one out as well. Probably need to tighten that up a little bit. Let's say that's our benefit of the doubt on JNK. We clearly broke this trend line up here, so I think we're heading straight down to 107.38, and we'll see how it behaves down there. Clear negative divergence on JNK right there on the RSI, and it is there on the PPO. So you can see negative momentum in the momentum indicators indicating that price reversal is likely, and this was all divergent high price action, and now we're getting that price reversal. That's a sell signal right there. So we head down to here, this next 107.30 area or so, get a bounce, and then we'll see. But I think it's likely we're going to break that as well. All right, gold. So gold actually, big selling in gold, and that is, we see this when there's markets selling off, the initial sell-off, gold oftentimes gets sold into. But then when you look at past history, that sell-off is usually reversed, and they actually buy gold after, they buy gold on market fear. So the initial reaction is a liquidity reaction where markets sell gold to raise cash. But after that, if there's actually going to be a sustained bear market or sustained sell-off, then fear starts to be the reaction, and gold does well in fear. So that's a possibility. That's very similar to what happened here if I go back to 2009, let me just pull that up. Right here, so you can see in the initial drop in gold, but then gold started to catch a bid there in 2008. So markets were still selling off in 2008, and gold started to rally out of that. You can see this is all 2009. Gold was rallying. If I go back to the SPY, you'll notice that back then, markets didn't bottom until 2009. Gold was already well into a strong rally at that point. So something to look for. Back to gold, sticking on the weekly charts and just the longer, bigger picture themes. So we have a trend line right here coming off the May 2019 lows. Here's the COVID drop. And then you can see we basically dropped right to that trend line. We're just slightly above it now, but we did get somewhat of a reaction. So we could, we could trade around this area for a little while, maybe tag the trend line. I'm thinking this is going to be support. Now, the reason why I like it as support, or in the area of support, we'll say, is we have bullish divergence if we hold the price right in this area. So you can see here, this is your former low right here in gold, and we made a new lower low. So price is still moving down, but the momentum is making an equal low. So if you look here on the RSI, it's actually a higher low slightly, pointed straight down though. So again, equal or higher low is a divergence, and the PPO, you can see clearly a higher low as of right now, although pointed straight down. So we have bullish divergence still in gold. We don't have confirmation. So what I mean by that, what I'd be looking for is if we bounce, and we get a bounce, we need to see a bounce, next week pretty much. And then the RSI will start to turn up, and the PPO will start to turn up, and that will be confirmation that that gold, it does have bullish divergence. Now, bullish divergence doesn't necessarily mean it's a buy signal, but it's telling you that there's some support here, that it's putting in a base, and it's likely going to reverse trend. And then what you can do is, you can either, depending on your view on gold, you can buy positions here or wait for a break of trend line resistance, which would be the more conservative area. Right now, I have it marked out right about here. But I would say a break back above the 1790. If we break back above that and can hold up there, that would be a pretty good signal that gold is actually going to make a new leg higher in what seems to be a bull market as of right now. 1790 comes all the way back to the former resistance right here in 2011. We tagged it 3 times. That's confirmation of a trend line, and that was major resistance. So you can see we're below it, but I think a snapback above it would be a false breakdown, bear trap. That's AKA bear trap. And then we move higher. Again, I still see this as a longer term bullish trend. Now, that could change. We could break lower, start to break some of those bullish constructs and break down. But as of right now, we're in the area of support. You buy at support in bullish trends, and then just manage that risk. All right, let's look at financials, because financials and oil have been the 2 strong sectors in the S&P 500, while tech has looked pretty weak, relatively weak recently. Actually, tech's looked weak. The large cap tech, like the FANG stocks, have really gone nowhere for 8-9 months. So they're showing signs of exhaustion. And then here's financials. Let's go to the weekly chart. You can see here on the weekly, that's a pretty clear reversal doji. Let me get rid of this trend line just so we can point this out. You can see here clear reversal candlestick on the weekly chart. So what you look for now when you get when a doji shows up like this, then you look for a confirmation week. You look for more selling next week. That's what I think. That's what I think we're going to get. I think next week's set up to be a pretty good sizable down week, and that's what this chart's telling me is coming. Now, if you don't get selling and this continues to rally, then it just kind of marks that out. We just basically negate that as a reversal candle. But as of right now, that's a reversal doji on the weekly in financials. Financials look like they're going lower down to 29.75, and then we'll watch for what happens there. If we break back down below this trend line, I have it marked in red on the weekly chart. This is going off the 2011 lows. So this is your bull market in financials. If we break back down and start to sell off, then likely that was the top of the market for the financials, and we're actually heading into a sustainable bear market. The COVID drop was not a bear market. A lot of people think that was the bear market of, we were in a big bull market for the last 10 years. We had the COVID drop. That's the bear market. And now we're starting a new bull market. I just reject that thesis. I just don't see it in the charts. I don't see it in the SPY. The SPY has not, going back to the SPY has not recovered the bull market trend line. We keep getting rejected at resistance. And a bear market is a sustained occurrence. All right, it doesn't last 1 to 2 months. The Fed pumps money and everything's all good. We're seeing signs that the Fed can't just do that in the bond market. The bond market's not going to allow the Fed to just pump money and as long as they want without having a reaction. So if the Fed wants to stop the bond market from having the natural market reaction of selling bonds, then they have to step in and buy a bunch more bonds. And if they do that, the dollar is going to sell off. So you see there's these levers that we can play, and we have to just evaluate what's happening in the market. You're either going to have markets selling off and the Fed just allowing that to happen, which is what they're doing right now. Make no mistake, the Fed is not stopping the market from falling. If they were going to stop the market from falling, they would have last week come out and said something to try to support the bond market. They didn't. They basically said it's okay if the the rates are going higher, the economy is getting stronger, yada, yada, yada. The point that you really have to understand is the Fed is not stopping the bonds from selling off. So that means that that rates should continue to go higher and the markets should continue to sell off and go lower. And maybe the Fed wants the markets to kind of give back a little. Again, the Fed doesn't step in at the highs, all right? They never have, at least. The Fed waits for markets to sell off, start to get nasty out there, then they step in and come to the rescue. So when we start to sell off impulsively and get down, and there's a lot of fear, then we'll start to look for signs that the Fed's going to step in, and we'll look for signs that the dollar's going to start dropping again and gold's going to start rallying. That's kind of the longer term picture that I think is going to play out. As of right now, markets look like they're heading lower. McDonald's, I just want to point this out on the weekly because, I kind of feel like McDonald's can be somewhat of a bellwether, very similar to Walmart, of just the economy in general. But you can see here McDonald's, this is coming off the 2003 lows. This is a big, long, sustained bull market in McDonald's. As I move up, you can see lots of times we held this support line. We broke in the COVID drop. It broke that trend line, impulsively broke down. And what this looks like to me is the recovery was just a mere back test. Yeah, they recovered it a little bit, but it failed. That was a false breakout or a bull trap. As I zoom in, you can see we're continuing on the weekly chart to soften up and look weaker. And look where we closed. Look where we closed on Friday. We closed the week at a new lower low that it's been in this consolidation pattern. So looks like we're starting to break more to the downside. To me, this looks like McDonald's is entering a bear market. And where does it go? Well, there's lots of different levels we can point out. There's, we had some major support down here at 154.90, kind of in this area. So maybe that's, the area we're heading down to. Looks like there's a little bit of support right here at 173. So lots of different areas, but I just want to point out the bigger picture that to me this looks like we're starting a bear market. We're starting to see signs of stocks. The more and more stocks that you start to see do this and look like they're actually heading into a bear market, it's going to bleed over into the indices. So energy, here's XLE, energy sector, and it had a little bit of a reversal candle, still held above what I see as trendline resistance, which is right there at 47.07. So I don't see anything yet in this one. People have been asking me what I think about the oil sector. I think the energy sector is going to sell off. I really do. If the SPY is going to sell off, the S&P 500, the energy is going to go down too. So I do think that's going to happen. I just don't quite see. I don't see it in this chart here. One that looks a little different though is this XOP, and this is gas and oil, I think, exploration. And you can see on this one, we had some trendline support back here in 2019. Lots of reactions along this trend line right here. And then recently, this week, we actually broke above that, looking like a breakout, but closed the week back right on that support line at about 80.50 or so. So we closed back below it. Next week, I think we're going to get some selling here. I think we'll see a big down week in XOP, maybe down to 71.08. I think that there's a good probability that actually happens. Now on the weekly, I don't see any divergences, but again, I don't use divergences on the weekly as much. Daily, yeah, we do have negative divergence there on the daily. So again, we closed right on it. I'm just looking, look for more selling. I wouldn't anticipate it. I would just wait for it to show up, but that's a possible trade. All right, let's look at TAN solar stocks. I think there's just a good opportunity to short this thing, and that's why I want to point out where there's potential to make money. TAN, nice clean uptrend line coming off the March 2020 lows on the weekly chart. So nice firm trend line, and we got a breakdown and a sell signal. This was forecasted with negative divergence on the daily chart, so it was telling us that this breakdown was going to come, but there it is. There's your sell signal, break and close on the weekly. Weekly support is now broken, so I would look at it as kickback rallies to trendline resistance should be faded. That's opportunities to establish short positions or add to short positions. And yeah, that's what I would look for, is if you get a kickback rally up to the trend line, that's your spot to take a very low risk short trade. Or this could continue to break down. So look for further downward price action as time goes by. Walmart, you can see closing, the just extremely strong selling in Walmart coming down. I pointed this one out right here. Right when this broke up here, I said it looks to me like Walmart's heading straight down to 129, 130 basically. And I've talked about this in several videos. Sure enough, there you go, right down to it, closing right at that trend line support. So we'll probably get a bounce here. I would think we'll bounce here, get some sort of a bounce. I don't think it's going to be a very sustainable bounce. I think it's going to be just a reaction off of this major support line, bounce, and then we kind of muddle around and then fail. But, you know, I would think we'd get a bounce here. Rolling back just to show you this trend line, this is coming off 2015, big bearish rising wedge. See all the reactions that we have? We broke to the upside here. I believe Walmart pumped the breakout right here with some announcement of like they're doing some online stuff. It was a COVID pump. And you know, so it rallied, but now we're coming right back down and starting to fail. So bigger picture, I really think Walmart is heading down to this 86 area. I think we're going to bounce here. We're going to eventually break this bearish rising wedge pattern, which should break to the downside. Since we broke to the upside, I think it will be a more impulsive break to the downside because that creates this bull trap all in here where all these people, I mean, if you didn't get out right here, you're likely trapped. All this price action right here going back for, you know, almost a year is likely trapped long, and they didn't, you know, they're not trying to sell. So that's why when you get the bounce, that it will likely be, it will likely get faded because anybody that's trapped up here, you get the bounce, they sell into that bounce. They just want to get out. So they create more supply. There's more sellers that come in on the bounce, and then you continue lower. All right, so that's Walmart. All right, I'll just wrap up with this one. It's just a trade idea, potentially. I like to point these things out before they play out. Obviously, nothing's going to guarantee that it will play out, but I want to point out things to look for. All right, so AMD here. This is a weekly chart. We could look at the daily. It's all the same in terms of what I'm trying to point out. We got a trend line here coming off the 2016 low. So basically, nice clean trend line. Lots of reactions along this trend line where we held support. And, you know, we're right there again. So again, we hit support again at 79.12, bounced. We're in the area, though, where I think we're going to break to the downside. If the markets show continued weakness, this thing's going to break as well. So that's just an idea. If you look at the daily, nice big bearish divergence. Look at that. Just clean bearish divergence where the momentum has basically just been dropping off consistently. And the price hasn't really gone anywhere. I've got this marked out as this sideways consolidation zone. And as the divergence has continued to play out, you know, we're struggling to go much higher. So all these little pops, little spikes are divergent highs and they get faded. So what we wait for is a break of trendline support, a sell signal basically. What's a sell signal? That would be a big break of this trendline support area. Right now we'll open up, it's about 79.40. You're going to want to wait for a nice impulsive hourly break below that and a close below that. And then what? You know, look for continuation of that trend. So that's a setup. It's, you know, it's not something I'd want to step in yet, but I think it is going to break relatively soon. If the market continues to break and we see weakness in tech, then I think AMD is going to sell off as well. I think this AMD has been part of the Bitcoin trade because you buy the processors, the video cards to mine Bitcoin. So again, you could maybe take a look at Bitcoin to see how the price is doing. That might help confirm. But ultimately, I just watch this trend line. It's set up with negative divergence on both PPO and RSI. Nice cleanup trend. We're likely going to get that sell signal shortly. And I'll wrap up here. It's a longer video, but I appreciate the everyone kind of commenting. I appreciate leaving, you know, a thumbs up. Leave a comment if I missed something or if you want me to take a look at something, and I will catch you guys on Monday.